Good evening, good evening. Welcome to the live Facebook of Trade VSA. I'm your host, Martin Wong, and of course, tonight is another update or outlook update on what really happening in the scope of what we've seen in the Israel and Iran conflict, which continue to escalate as a third party, the US Donald Trump, now jump in and put a weight on how the conflict should end or how the conflict should go on. So this has made the market a bit more volatile, but I will unwrap everything so you can understand better considering the likelihood outlook where it's going. So I'm going to share with you tonight, and of course some of these things that we talk about in here are generally really seasonal and trend. I'm going to explain it all out so you can actually understand it better, and also look into possibility how you want to plan your trading right now. Okay, how you want to plan your trading right now. People may see it differently, so I'm going to give you a strategy how you intend to go from there, whether you should buy, sell, or wait. So that would be the so-called format for tonight, and I do hope that you all will sort of find this talk interesting. I won't keep it too long too. Just going to get straight to the point. So of course a little bit of our company. Those of you who are first time, I'd like to welcome you. Our company is the first investment digital license holder, and we are coming you to this coming Saturday. That's right. So if you are in the Mid Valley, we'll be there on 21st and 22nd of June. Come and see us. We have a booth there, I think in booth number 130. So come and say hello, and be great to share some of your SmartRobie experience with what you have so far in here. We'd like to hear from you too. All right, and if you have done pretty well or did not do pretty well, let us know so we can improve our services to much of display to the day. And for those of you who are looking to incorporate artificial intelligence or AI into your analysis or want to take it to the next level, certainly we have something for you here, incorporating some of 2025 at least, some of the new work that I've done, and how you can so-called injunct a lot of the artificial intelligence in your analysis. And this is where I will share with you in 4 hours, and if you need the CPD point, definitely this is something you want to look at. It'll be 10 points running on next Wednesday, okay, 10 to 2:15 p.m. So next Wednesday we won't be doing our live Facebooks, as I'll be focusing on this on the 24th, so I'll probably take a short break on then. So hope to see you. Some of those of you who are listening may be interested in our CPE point, or you need a 10-point CPE, and this will definitely be that course that will put you in par with the market. All right. A gentle reminder, this is something I think will benefit many of the members, and if you are going into it. And of course, what we do is that we go back and back test and study it. And keep in mind something I flash on time and time again. This is a very good chart to remind us that most of the time the monthly seasonal. So we have seen the July is will likely be peak. So June is pretty much where we are right now. I expect the May to be the worst. You can see May time frame came out. June will likely to be right at the bottom pivot in here. And now this is really a gentle reminder. The market doesn't move up in a straight line or doesn't go down in a straight line. It sort of moves sideways, and we will expect the quantum of it, we do not know yet how much this big movement is, but generally if you look from the seasonal, it's likely to move this month of July. So we are counting on that one. Looking at the past trend, this is where it is likely to go from here. All right, now if you have any questions, do let me know and put it into the chat there. I'll be happy to go through this all. Alright, the KLCI, as you said, what you've seen in here, for the month of May been generally very good, followed by the green pentagon, which is right on the track here. The market did go straight up, and that's where you want to learn to follow that trend, especially when it felt more than you see the market likely to go from here. So I'm just going to show you the latest the KLCI chart from our BSA 360 here. All right, and I was just looking at this. All right, we are back now, and I think I just sort of switched to the market right now. So I'm just going to show you where we were on the FKLI. We apologize for the drop line that we have seen. So you can see from our chart here. All right, just type 1 if you can hear it again. So I do know that you are paying attention on the comment section there. So you can see from here, market started to push right up, okay, and so that was in April. Then the green pentagon came in 19th of May, and since then there was only one turning of the KLCI futures, right? Now take note, the KLCI future did turn up, but then you follow by a 2-bar reversal, and that's definitely not a good sign, because these are what we call sign of weakness. Usually you get sign of weakness when the market goes up and then U-turn and then the market come down. So right now this is where we are, 15.0. So I'm just going to paint you the scenario where we are heading off and at least give you a synopsis, and in the backdrop of the Middle East conflict too, right? We're going to look back into some past incidents of the Middle East conflict, and then we'll probably go from there, okay, to see how this is likely to pan out, okay? So this is going to be the format going forward. So I hope that we will get a bit more insight to how we are able to do this better, okay? All right. So before we do that, let's take a look at the foreign funds, okay, which is an important part of where it explains the market for what it is. All right, so definitely if you see from here, let me just bring it up, the VSA 360, and if you look at this one here, from the VSA 360, you have the foreign funds. It's been since going back to what date was that? May. It's always been every day net outflow, net outflow, net outflow, okay? So that's the theme. So without the foreign funds coming in, there is no possibility that this market can, really move up and have some sort of potential. That's been, bottom line, and how difficult for everybody. You just get foreign funds coming in. When they do come in, the market goes up, and we are at the mercy of it, right? So if anything goes, watching that foreign funds coming back, that would be one of the best things ever. But as I said before, right now we don't have this eminent funds coming in. So we are left to the devices. Of course, energy, you can see from the sector here, which I will just show you too, is one of the better performance, and because that was due to the Middle East conflict, and a lot of the energy prices, the crude oil prices, jump up a lot. Okay, so that was fantastic. I think many of you probably know that already. And so that's why we want to see whether energy sectors will be some stocks that we want to look at. So that's where I'm going to be looking at next. So the foreign funds, we know those are not doing too well. So let's also take a look at the next one, which is the US dollar, right? So you actually know where's the market heading, getting some sort of direction here. USD, MYR. It's also good for my day-to-day understanding. So we had a good test on the low side, which is the 422 level here. All right. Now going forward, this does look like the 422 level is likely to hold, and we're going to be gravitating up to 4.3 around this level in here. Pretty much of it is going to be more of a sideways. The trend is still pushing on bias to the downside, which means ringgit strengthening or a sideways market. But take note, when the trend line, which I talked about on Monday with our member, which was yesterday, I think on Monday, today is Wednesday, when the market start to turn back up, right, a few more bars in here, then you will see the trend, overall trend is going to change back up. That's the initial. Once everything is already preset and it's likely to move up, then we'll have the strengthening. So this is also in what we call in align with what I've said before. The July and the June month is also one of the lowest month for the US market. So if you intend to get into the US market, after I explain to you on the scenario of the war that you see, then you will know that, hey, maybe it's a good time to be buying into the US market and trading the US market, because there is some opportunity there if you know how to look for them. So I'm going to show you how you can look for them very easily. Okay, and we're going to go from here onwards. So we've done the ringgit, US dollar, and here for a start, we're going to be covering the S&P 500 decline. Okay, so this is a good chart that I generated, and this is how I want to teach you how to use AI to get all this information. Of course, some of these you need to still verify them. Okay, it's important that you still verify them, and if you can get that verification done, definitely it's going to be good for you to do. But I do know many members and people in the public generally are very busy. They don't have time to do this kind of thing. So just come over to my talk, and I'll be happy to share with you some of my insight that I gathered, and also I'll try to verify them if I have time. But usually I do when it comes to this kind of point. So you can see here for the Middle East conflict, I didn't go back too far back, just 2020, there was an assassination of the Iranian general, Qasem Soleimani, right? But the drawdown was only a 1% drop. And then that was the bottom, January 6th. And then it did recover 1 month later, back by February. You can see those not so meaningful, right? You get recovery, right? And then we hit a new high in 2020. And of course, 2020 was also a good time where the market did pretty well, all right? I think many of you know that too, all right? So that's where. Then we have the unfortunate, right, which I have talked about a lot, is the Russian full-scale invasion of Ukraine. I think many of you have seen that in 2022, as I was covering this live too in a session like this back in 22, and it's always been almost 3 years, right, where I said that the Ukraine-Russian war will be over very soon, after 3 weeks, right, because we did not estimate that that Ukraine able to hold on. Now, lo and behold, most war will come to end very soon. Usually, typical war will last 3.5 years. So, Russian-Ukraine war has sort of coming to 3 years now, from the February 24th to 2022, 3 years in here. So, right now, you could also see Russian and Ukraine are trying to come up with some deal. Right now, if they couldn't come up with any deal, so what likely to do, they will still continue to prolong the war, but the casualty will drop in here. That's why the fighting with the drone, just merely using the resources to fight is that way going forward. It's more of a resistance rather than ongoing conflict where human lives are lost. And within 4 to 5 months, okay, the market actually bottomed up to the pre-crisis by February and March. Of course, the bottom, we went from February right to the October, and by early 2023 we hit a new high. So it did take significant time for this one. It started to drop right at the bottom on October 2022. You can check that one out on the chart. Interest rate, and you all know far low and below what would likely to happen when interest rates are raised. Generally, market do drop historically. Yeah, market do drop a lot when you see interest rates are raised. So this time it's a different case altogether. As I said before, this is more localized to the Middle East conflict, which has already been ongoing, right? It's just that used to be Iran, this was with Israel and Hamas, and Hamas has already been demolished. So now it's going to the root of it. That's on the interpretation from Israel. So they're going after Iran. So how this market is going to turn up, your guess is as good as me. But my job is try to see from a context of the stock market in here. And I would say that a lot of this time, the significance of it, unless there is a change in the economic structure of the US market, a lot of these things will rebound back generally within 3 weeks to 1 month or so, which is very similar to the story I paint during the Russian-Ukraine war, where I thought Ukraine will fall within 3 weeks, right? Yeah, it didn't fall, but because of Ukraine being one of the largest food supplier in there, right? And also the post-COVID, then we have the big tech fallout from the AI, and lo and behold, today we see food prices has gone up so much in the US, where the re-election of Donald Trump also, where they will continue to lower down inflation, but instead we saw the Liberation Day, right? We have Trump 2.0, and that's where we are today, right? So how is it going to go higher, right? So this is where I want to share with you, right? Now, the rebound recovery insights, we're going to look at it here, all right? So typically, any shock, modern war, okay, you'll see S&P 500 go down a lot, but worst case is under 25%, okay? S&P go down by 25%. So far, we were only down a couple of percent only, all right? If you look at the, so far, let's look at the S&P 500, okay? On that day, the war came back, the war came, and then you couldn't even see it right here, right? This was the firing. The firing was on the 12th and 13th it started. Then there was de-escalation. As a matter of fact, the market broke higher, right? You can see from here. So, like it or not, many of the public interpretation has always been war is bad. Okay, war is bad, war is bad. But market don't go down. So when market don't go down, that tells you there is not much of impact, all right, like we seen previously. Now, if you are a stock market historian like me, who is interested in this, you will likely to see that many times during war, the market will take opportunity to go higher, not go lower. Yeah, the initial impact, you'll see 1 or 2% drop, right? But after that, right, the recovery to the pre-crisis happens. In this case, generally about 3 weeks. So the speed of the rebound is very, very good. The market recover very fast in here, generally within 3 to 6 months. Only 2022 took longer, okay, 4 to 6 months from the bottom, okay, not from the start of the war, because we need to know how far the bottom is. In this case, you can see the S&P 500 only 1 day blip down, so it is very similar to the assassination of Qasem Soleimani. Okay, Soleimani, which happened on January 3rd. So immediately it will make a new high very soon. Those are my prediction that this market is likely to do this more than anything else. So it's going to be a small blip. All right. Rest assured, don't get too scared of the market. And I do think that many people miss this opportunity if the market were to do a rebound from here. All right. So if you have any question that you want me to answer, feel free to put it into the chat box in here. So bottom line is quick recovery, okay, within 3 weeks, maybe even faster. Now, on that basis, right, I would say the KLCI that we see here is unlikely to break lower than 1500, okay? So because pretty much of the war impact has been discounted, so KLCI won't break. Now KLCI, as again I said before earlier on, it's more affected by the foreign funds rather than overall global event. Of course, if global overall event happen, they do take a hit. There's no doubt about it, okay? But there is always a support level. In this case, the support level is going to be that 1500. So I can pretty much say that unlikely this market will go down some more, all right? Because we're really depending on the foreign funds flows, all right? It's also a weak spillover from the global rally. Every time when we see US rally or the tech rally, right? Certain counter in the tech sectors will move up, but the overall market doesn't, all right? I think this is something that many members also pay notice to, right? I'm sure you know about this so-called special condition. And of course, I already said many times before, the KLCI, out of the last 8 years, we only have 2 or 3 occasions of positive return in here, the KLCI. But if you were to look into individual sector, it's a different story altogether, right? And of course, the last point is just when war comes, there is a flight to safety, okay, to treasury bills and gold. So the KLCI, as I said before, July, May was a worst month, as I said before, right? June is going to be the bottom. So depending the next 2 weeks, if we stay around here, we might get but it will likely end as a negative here. You can see May is a negative, but July is the rebound month. Okay, we got very strong rebound the last 3 years, 3%, 6%, 2%, right? Except for COVID. In 2021, that's a COVID too. It came back again, right? Other than that, everything looks pretty good in here, right? So these are the 3 possible scenarios where we are heading, okay? So I'm just going to paint it up in here. You can see the KLCI is where it is. And of course, you can also use the Pentagon Guider, the green Pentagon, the red Pentagon. Just look for the red Pentagon on the SmartRobie apps, okay? That would be my first advice for you, to start off looking at the SmartRobie apps, ensuring that when it turns green Pentagon, that's the time you want to get more exciting. So I'll give you the 3 possible scenario here, okay? So definitely the first one is the breaking above 1660, okay? Breaking above 1660, that would be a bullish, a bullish outlook from here, but we haven't seen that yet, okay? So that is unlikely to happen, the 1600. So then you have the sideways market, all right, which is this little jagged area here. But let's take a look at the breaking of the 150. Now, if the market do break for 150, there is a support at 1460, okay? 1460 is a good level, right? As I said before, that's where you want to be looking at, 1460, okay? So if you don't get that 1460 breaking down, then that's a good thing, all right? So 1500 need to break, but I said before, unlikely the market to break 1500. But if you do break, it's going to go down to 1460. All right, those are the bottom side scenario. The more likely scenario is that the market will try to push up. Remember, right? We did say that July month, August, it's going to slide to turn positive. So market's going to happen. So like this scenario, the market's going to turn back up. Unlikely to hit 1600. If it does, I'll be back here to update you guys again. But you just want to watch out for that green pentagon. And this is the scenario likely to go from here. The kind of sideways market that we see right now. Okay. Any questions so far? If you have any question, do let me know. Okay. And I'll be happy to answer them. All right, any questions so far? No question, huh? Very good group. So this is where the possible strategy going forward from here. So you want to, if the market to break above the 1560, then the next resistance level is 1620. So that will be where you want to buy on the breakout, or a little bit of pullback that you see here. Okay. If not, then you just want to sort of stay out in the market in here. Then you have the what's the next level here? Right, fall below 1500. That's a scenario I'll talk about, but I don't think this is likely to happen, right? And if you do fall 1460, you're going to get 1500 becoming the resistance. That's where you want to sell, okay, if the market break below in here. Right. But of course there are times the market may test and test again, because as you seen before, it's already red pentagon. Okay, so smart money will be distributing. The more likely scenario that we see right now is the sideways movement. All right, so the sideways movement is what we are likely to get. And just hold your trades, okay? Hold your trades. Don't get too scared, okay? And of course, if you need to honor your cut loss, or what we talk about in Pentagon Guider and also holding period, is the expiration period, right? You need to exit out, you will exit out, because there is a holding period. You don't hold too long. If the market moves too much on the sideways, it's better to exit out. Statistically, you'll be much better off if you exit the trade and then come back in. It's like keeping your powder dry. A lot of people don't follow this rule, and that also explains this little small contribution that holding your trade too long, not working, will act against you. Now, trading is all about statistics. Just like any businesses, if you do small, get your revenue, get your income, and that's where you go for it. Don't try to go for a big win, because in this market, right, pretty much for 2025, you're not going to get that kind of big market win in here, right? It's going to be that small. So if the trade doesn't work in your favor, you want to exit immediately, okay? So that's my advice on what you see now, okay? I hope that advice will be beneficial to you, right? Likely scenario is going to be a sideways market. All right, so we're going to be looking at some Pentagon Guider trade idea in here. Now we started collecting some top 4 performance metrics for the Pentagon Guider. As I said before, I'm going to share with you the win rates is somewhere between 44 to 64 for Bursa and US market over a period of 15 to 16 days. And that win is only considered when we have 4.5% price gain. Okay, so at least it's better than the FD. Profit factor between 1.3 to 1.5. Above 1.0 is very good. Okay, return for 2024, depending on the trading strategy, market cap is somewhere between 7 to 27%. So far, the return for 2025 has been minus 9% for the worst case, up to 0% in here. Now the drawdown, okay, which means the accounts, when we do trade those, generally we want to keep it below 20%. It's drawdown to 7.5 to 14%, which means account do go lost. Because a lot of people, as I said before, you need to know how much is your drawdown. You need to know how much is your trade coming down. These are very important. Just like when you're driving a car, you need to know your fuel gauge. When are you going to hit that low fuel, so you go to the petrol station and pump. Very, very similarly. That's the kind of discipline that you need to know about your trading system in here. And you follow, like what I said, you trade and you exit out, then you should be fine on top on that basis. Okay, any questions so far? Right, so let's go on next. Right, now from the SmartRobie, we have the energy sectors, right? Lots of great stocks here. I think one of the ways to trade this, as I said before, it's not that difficult, is to follow the Pentagon Guider. Okay, so follow the Pentagon Guider. A lot of the how do I say it? All sectors are already turned green Pentagon. Some has moved up. I think Dialog has moved up. Dialog has moved up but started to come back down. So let's take a look at one of these. Is Dialog. Okay. Okay, you can see from here, yeah, Dialog, green Pentagon, right, move up, that's about $1. So it's a nice pullback in here, started to push up. And also notice this trend line here, still going up. Okay, so that's one of the candidate. Any oil and gas stocks that you all have, members, those public that you want me to look at, this great time to be looking into it. Okay, we are looking at the oil and gas sector. That's what you want to be looking at, okay? So go over to the hot sectors in SmartRobie and you check it out, okay? Charimin 5257. Let's take a look at that one. Petroleum here. Yeah, it did shoot up but came back down again here, all right? So this is fine. That's a nice pullback in here. And depending tonight, I see how the oil sector is going. But you want to go for things like maybe Petronas, because with the Middle East in such a turmoil, you were likely to, it's going to be Pet Gas. I don't think that's Petronas. Yeah. Okay, yeah, you can see Petronas started to move up too. Right, there was a big fall and then it started to move up in here. So the oil and gas sector, pick those charts that looks very favorable in your own analysis, and then that's the way you want to go from there. All right, not too difficult, Cannot. So I'll leave you guys on this end. If you have any stocks you want to look at, let me know. All right, else I'm going to cut short for tonight. You know, keep it to the good time frame in here. Now, if you have any stocks you want me to look at, I'll definitely look at the trading view. But as usual, you guys are great, and you very seldom ask questions. So it makes my life also easier. All right, if you have some stocks to look at, I'll be happy to look into it. All right, now big understanding, the algo now is to know what stages is the market moving here. Okay, now we have seen, right, KLCI is sort of moving in stage 1 accumulation. If it doesn't break below, right, then it's going to pick up stage 2, which likely to happen in July, which I explained to you now. So with that, know that SmartRobie is powered by the very powerful Pentagon Guider, giving you the entry level in here, right, and also join our premium membership, where our guidance and our monthly training will put you in the right way. And don't forget to join our Telegram chat room, as you can see. All right, with that, I'll end our talk. And don't forget to see us all at the Mid Valley this coming Saturday and Sunday. I'll see you then. Bye-bye.